Dow's down 350, obviously off the initial lows. Let's get to Bob Pisani. Morning, Bob.
And it was the initial low, 28.98, 10-1 declining to advancing stocks at the open. That does not happen very often. 90% downside day. Take a look, though, even worse over in Asia. Of course, we have Japan is closed, Korea is closed. But you see the Shanghai down 6%. That's the worst day in 3 years. The Shenzhen, that's not a typo, almost 8%. We have said this many times here. 95% of the brokerage accounts in China are small retail investors. They are very easily spooked. This is why you need institutional investors who are steady hands in the market. Notice our market's down less than 2% because a lot of institutional investors here. Take a look at the U.S. 17 on the VIX, highest since January. Already is down to 16 early on. And, of course, you get the knee-jerk reaction, which is let's sell semiconductors and let's sell big global industrial names. So there you go. That's the standard knee-jerk reaction that you get. If you look at the broad market reaction, not far off of what you would think on a headline like this. So industrials are also among the weaker sectors. Banks a little bit. They've been a market leader. Energy, less of a decline. Consumer staples and utilities still down, but not nearly as much. And, of course, the big industrial names, as I mentioned, your Caterpillars, your other big names in that particular space, the Dovers, the FedEx, all to the downside. I don't think you should think in terms of let's just sell industrials and sell semiconductors. If there is actually a real trade war, remember, this whole game goes out the window. The earnings situation would change dramatically. So we said last week the market's expensive. We were at almost 17.5 times forward earnings for this year. That's historically high. Think 15 to 16. If you say we need to change the multiple because global growth is slowing because there's really going to be a trade war, well, you're down there. If you go back to a standard number like 15 or 15 and a half, the S&P is at 2650. So that's why this is very real. And yes, you have a knee-jerk reaction, but this could change if there actually is something real materializing. That's why the market's moving off of the lows. It doesn't think this is going to happen. If you want to think of a way to gain this, at least down here, everybody says, is the delegation coming with or without Liu He, the head of the delegation? If they come without him, chances of a deal getting done soon are much lower. So everybody's trying to figure out how to game this. Meantime, the biggest IPO week we've seen in a long time. 13 IPOs this week. This would be the busiest week in 3 years. Of course, Uber here, that would be the biggest IPO since Alibaba. They're trying to raise maybe north of $8.5 billion here. Alibaba was 2014, but it's the largest U.S.-based IPO since Facebook. That's all the way back in 2012. That's all going to happen Friday as it's scheduled right now. They're going to be pricing Thursday night, Uber. For trade right here behind me. Of course, we're looking at 180 million shares, 44 to 50. Do the math in the midpoint. That's about $8.5 billion. But we've got a whole bunch of other big names out there. One of the more interesting ones is Parsons. This is one of these big government contractors. They're kind of like a Booz Allen type. They're going to raise a lot of money. These companies are getting in under the radar because Uber's taking all the air out of the room, but the bottom line is we're going to raise an awful lot of money if all goes as planned this week. Finally, just want to note on Friday, the IPO ETF that Renaissance does, that's a new historic high for them, up more than 33% so far this year.